When a market starts pressing against the edge of a pattern that has been building for weeks, you can almost feel the tension in the charts. That quiet pressure is exactly what we are seeing right now, and it is creating a moment where a single breakout can flip the entire narrative. This is Shah, and today we are looking at Fluid. The coin name is Fluid, and the current price is $3.5. On the daily time frame, Fluid has been moving inside a falling wedge that stretches across many candles. This pattern usually shows exhaustion from the sellers and strength quietly gathering at the lower end of the formation. Prices have now traveled all the way to the upper boundary of this falling wedge, meaning we are standing right at the edge where a breakout becomes possible. The chart is not showing panic or irrational spikes. Instead, it is forming steady compression with each lower high getting weaker, a classic signal that buyers are slowly preparing to take control. Now moving to the 4-hour chart to get a cleaner picture of what is happening in real time. On this time frame, the immediate resistance is sitting around $4.1. This level has acted as a lid for several sessions, rejecting price each time it attempted to break through. On the downside, the local support at $3 is holding firmly. Each retest of this support has shown a confident bounce, confirming that buyers remain active and are not allowing the structure to break down. Fluid is now positioned between $3 and $4.1, but the important thing is how close the price is to the breakout zone. The structure is tightening in a way that usually ends with a strong directional move. If this coin breaks above the wedge and pushes through $4.1, then the next major resistance stands near $5. This zone is psychologically important because it is a clean round number and a level that historically carries emotional weight for traders. Reaching it will require momentum, but the current setup shows that such momentum can easily appear once the wedge breaks. A retest of $3 would still be considered healthy. It would not invalidate the setup because falling wedges often produce final retests before expansion. What matters is the daily candle. As long as the daily close stays above the $3 support and inside the bullish part of the wedge, the upward direction remains valid. The 4-hour noise can mislead traders, but the daily structure is still the foundation that guides the overall direction. Fluid has been consolidating long enough to justify a meaningful move, and the current green environment across many assets shows that buying interest is slowly returning to the market. If the breakout occurs, Fluid can shift from a quiet accumulation phase to a stronger recovery phase that targets higher levels. If you want more coins analyzed in this style, feel free to drop the next chart.